NIO recently broke the $30 resistance level. Will it keep up? Want to know more about it? Keep watching. Hey everyone, and welcome back to our channel. In this video, we'll be talking about NIO stock and everything that you need to know about its growth. But before we start, do consider subscribing to our channel and turn on the notification bell to watch more of our exciting content. Let's get started. NIO is a market leader in China's burgeoning electric vehicle sector. The market hit $98 billion in total revenue in 2019, according to Mordor Intelligence, and is expected to increase at a 31% annual rate through 2026. The Chinese government is assisting in this expansion. It seeks to cut pollution and lessen its reliance on imported oil. The number of licenses for registration of internal combustion engine vehicles in Beijing is capped at 10,000. EV purchasers in China are also eligible for significant tax breaks. The market share of NIO is increasing. JP Morgan Analysis Nick Lai sees NIO as the rising champion in the Chinese EV market's luxury segment. I wrote in October, EVs are expected to account for 20% of the Chinese car market in 2025, up from less than 5% in October 2021, thanks to a shift in customer preference and a drop in EV prices as battery costs fall, according to Lai. NIO is a natural designer who has the potential to improve his manufacturing skills. What do you mean by that? Both domestic and foreign startups such as NIO and Tesla excel in exterior design, human-machine interaction, and technology innovation, while joint venture brands outperform competitors in manufacturing procedures, said Eileen Ren, vice president of JD Power China's NEV Solutions. NIO recently held NIO Day, during which it unveiled new goods. The ET5, a sleek, mid-sized vehicle with a 1,000-kilometer range and a battery replacement costing close to $41,000, is one of them. For a $107 monthly membership charge, the ET5 will add more autonomous driving features, including Pano Cinema, a panoramic digital cockpit with AR and VR technology. According to Seeking Alpha, NIO intends to expand its operations into more European countries. With the expansion of Norway already underway, NIO is now focusing on Denmark, Sweden, and Germany. Furthermore, NIO will begin producing automobiles in NIO Park in the third quarter of 2022, with an annual output value of $80 billion, according to Seeking Alpha. Chinese firms are withdrawing funds from U.S. markets. According to MarketWatch, the value of Chinese stocks traded on U.S. exchanges declined by $600 billion in 2021, and this trend is expected to continue. Unfortunately for investors, the United States and China's actions are likely to keep this trend going. According to MarketWatch, this is owing to a new U.S. rule requiring additional disclosures from Chinese firms' auditors, as well as pressure from Chinese officials on companies with a lot of data to list in China instead. This isn't idle chatter. Because of its huge data holdings on its consumers, China pushed Didi to delist from the New York Stock Exchange and sell shares in Hong Kong. According to MarketWatch, a move like this is the most straightforward and best potential outcome, and it would include NIO. NIO stock has lost a third of its value since its third quarter report. If Wall Street is correct, purchasing NIO at its current price of $28 per share represents a chance to more than double your money. However, if the trade war between China and the United States overwhelms Wall Street forecasts and NIO's quickly increasing business performance, the price will continue to plummet. As of mid-December, 3.8% of the company was sold short. NIO ranks first among Chinese pure-play EV firms in terms of revenue and revenue growth. Notably, vehicle sales account for only slightly more than half of BYD's revenue. There are a few essential features that set NIO apart from its competitors. To begin with, NIO's novel battery-as-a-service concept allows users to replace their batteries in their electric vehicles at any of the company's 700 battery switching stations. If users don't have time to recharge their drained batteries, they can swap them out rapidly. Alternatively, they might swap out a battery and go with a larger or smaller pack, depending on their needs. So far, NIO has completed over 5.3 million battery swaps, demonstrating a high demand for the service. Second, NIO is introducing two new models, a luxury sedan, the ET7, and a mid-size sedan, the ET5. Furthermore, in 2022, the corporation will introduce a third new model that is yet to be revealed. Few of its competitors intend to introduce as many new models this year. These new models are also projected to be among the best in their target segment. Both the ET5 and ET7 have a monthly subscription for autonomous driving updates that costs RMB 680. Furthermore, both offer multiple battery options ranging from a standard range 75 kWh to a 150 kWh battery that can go 620 miles on a single charge. ET7 will be delivered in March, while ET5 will be delivered in September. The ET5 model costs RMB $328,000, approximately $51,500, while the ET7 costs RMB $448,000. Customers are likely to respond positively to these two new models, boosting NIO's sales in 2022. This could help the stock's price rise in the new year. The forward price-to-sales ratio for NIO stock is around 4.6. This is akin to Li Auto and XPeng, two of its competitors. However, NIO's ratio has improved dramatically since January 2021, when it was approximately 10. BYD stock, on the other hand, has a price-to-sales ratio of approximately 3. Because NIO is currently losing money, the price-to-sales ratio can be used to compare its valuation to that of its competitors. A smaller ratio is regarded as preferable. Again, NIO stock appears to be significantly undervalued when compared to US EV startups such as Rivian or Lucid, both of which have only delivered a few hundred vehicles to date. NIO is expanding into European markets in addition to the home Chinese market. In September, it began delivering in Norway, with plans to expand to 5 more countries by 2022. This expansion, if successful, will establish NIO as a leading EV manufacturer capable of meeting worldwide quality requirements. Despite the rivalry, NIO's sales have been increasing. Its new models, worldwide expansion plans, and creative offers put it in a good position for long-term success. NIO stock is currently enticing due to its growth prospects and comparatively low valuation. NIO operates in the high-growth EV sector, therefore it reaps the benefits of market growth tailwinds. NIO also boasts an appealing product line, which includes well-received models like the ES6 and ES8 SUVs. NIO's battery swapping technology sets it apart from most other EV companies, allowing customers to acquire a completely charged battery in a matter of minutes by visiting one of NIO's battery swapping stations. This means that while taking longer trips in an EV, downtime is drastically minimized, as a battery change takes roughly the same amount of time as filling a gas-powered car, although recharging most EVs takes much more than a few minutes. NIO's battery swapping facilities are currently being expanded out across China, while there is yet no significant footprint outside of NIO's home market. Nonetheless, NIO intends to roll out that service in international markets over time, and once a significant enough footprint of them exists to make a difference, this should be a unique selling feature for NIO that helps separate its offers from those of most peers. This, I believe, might lead to significant market share increases, which is why I wouldn't be shocked to see NIO continue to develop rapidly in the next few years. NIO is expected to boost revenue by more than 100% in 2021, owing to robust delivery growth, with the expert community currently anticipating a 130% revenue increase this year. Following a tremendous 480% revenue gain in the first quarter, NIO expects a growth rate of roughly 110% for Q2 deliveries. As a result, NIO is outpacing the EV market as a whole, as well as peers like Tesla, which is predicted to grow by 50% to 60% this year, according to the analysis community, which is approximately half the rate that NIO is expected to grow this year. Of course, maintaining 100% the growth indefinitely is impossible, and NIO's growth will slow in the coming years. However, because its products are well received in its home market and the business is also planning a substantial entry into the large European EV market, NIO should continue to grow rapidly in the coming years. However, obvious growth tailwinds for a firm or even an industry do not always imply big share price gains. Investors should keep in mind that NIO, like all automakers, will operate in a cyclical, capital-intensive business with low profitability on average. This isn't to say that NIO doesn't have long-term potential. Nevertheless, despite the fact that EV sales are rapidly increasing, investors should keep in mind that a home run isn't assured when investing in NIO or other EV stocks. With that, we're at the end of the video. If you found it interesting, make sure to hit the like button and subscribe to stay tuned for more exciting videos. Let us know your thoughts in the comments section below. See you again with another exciting video. Until then, bye.